Oh, Stephen Cruz here, and really excited to host another live mortgage Q&A today on August the 30th. And let me just check and see if anyone has posted any questions today. What a fantastic day it was outside. It was nice and warm. Beautiful day to be out and about. Let me just check and see what we have here. Okay, no, I don't see any new questions today. So what I'd like to do is talk a little bit about the Canadian Home Customization Plan. I have lots of clients over the last couple of weeks and over the last year really that take advantage of the Canadian Home Customization Plan, and I just want to let everyone know how it works because it's a fantastic program and it really allows you to purchase a house potentially at under market value and get the house you really like. So if you ever watch that show, The Property Brothers, and where Drew and his brother, can't remember his name, when they help people buy a house and then renovate to make it their dream home. Well, this is how it works, and this is what we can do in Canada. So let me just share my screen, and I will talk a little bit about the Canadian Home Customization Plan. So basically, this is really designed for someone who has less than 20% down and who wants to buy a house but wants to make improvements to the house. So normally, first-time home buyers and many people choose to purchase a brand new house instead of a resale home because they don't find a house that has exactly what they want. And so they end up buying a house in a further community, further out. It takes a lot longer to get into work. Doesn't have a lot of things that they don't really realize cost money, like landscaping and fencing and decks and all that stuff. And so there's a great advantage. You get a brand new house and you get to choose the paint color, you choose the floor plan, you choose the finishing, but there's some hidden costs like landscaping, fencing, decks, and all of that stuff. Blinds and window coverings, a whole bunch of little things that are expensive. Or the garages are small. A lot of these new homes have smaller garages, and you also could be paying a premium because you're buying through a builder. So you're paying GST on top of the purchase price. So one of the advantages of buying an existing house is you're closer to schools and amenities. You've got larger yards, trees, and landscaping is already in place. But the interior of existing houses could be, worn, yucky, dirty, and they may need improvements. So the Canadian Home Customization Plan is really designed to help you to get the house that you want. So first of all, home buyers, there's a myth here, I guess. The myth that I've heard is home buyers must save both the down payment and enough money to pay for the renovations if they want to do renovations. I've had lots of clients who ask me that, who say, well, no, we don't really want to renovate. We don't have enough money. We've barely saved enough money for the down payment. Well, this program allows you to just have 5% down and get the cost of the renovations included in your home purchase. And so it's a government-sponsored program, which means it's approved through the insurance companies, CMHC, Genworth, and CG. And you can purchase with as little as 5% down. It's really designed for people with less than 10%, less than 20% down. And you can turn your next house into your dream house, just like that Property Brothers show. So this is how it works. Basically, you can get financing added on to your mortgage for up to $40,000 or 10% of the purchase price. Now the maximum is $40,000. So for example, if you were to buy a house worth $450,000 and you get a renovation quotes for $40,000, then your total purchase price is $490,000, and we can finance up to 95% of the $590,000. So you only have to put 5% down on 590. So you don't have to put 5% down on 450 plus $40,000 of improvements. And the key, a couple of keys, but one of the keys is that the house must appraise for the new purchase price. So after the renovations, the house has to be worth at least that much. So you don't want to go out and do renovations that don't add value to your house. And we do all of this up front in the beginning so that you can make sure it does in fact work. We don't wait till the end and surprise you. That would be a bad plan. So what it does is it broadens your potential to purchase a home in a neighborhood that you want. So if you see a house in a neighborhood that's kind of run down or has the big yard, is a great location, and you really want to be in this neighborhood, you can search around for homes that may not meet all your criteria, but then renovate them to make them perfect for you. And that's really the key to taking advantage of this program. And the other thing is, what if there's a really high demand in your price range? So there's lots of people looking in the $450 price range, for example, and so these houses are getting scooped up really fast, and it's really hard to negotiate a good deal on one of these. What you can do is you can go and look for homes in a cheaper price range, so $410, and maybe something that's run down, maybe there's something that's not moving as fast, but that has the great bones and has good potential for you to get some renovations and bring it up to a house that's worth $450 or more even if you do the right renovations. And so you can start looking at homes in your neighborhood that may be just not quite as nice as the perfect house that everyone wants to buy at $450,000. So some of these images are really funny, I have to say, but it's crazy how you can make a renovation and turn a house, that same house, from kind of ugly to, wow, look at how nice that house is. So one of the challenges I've found with clients in the past, they don't tell me that they want to renovate, and they're not aware of this program, and I try to let everyone know, sometimes I forget, but if they're not aware of this program, people will renovate their house after they move in, and then they'll use their credit cards, they'll use lines of credit, they'll use all sorts of other debt. And at the end of the year, now they've got these huge debt payments and their mortgage payment, and the interest on the debt is so high, and they're frustrated, and they want to somehow consolidate and get rid of this. But with the new rules that the government of Canada brought into place, with us only being allowed to refinance up to 80% of the value, if you had 5% down, you renovated, there's not always enough equity in your house to refinance up to 80% to get that money out. So it's best to do this up front. Make sure that you're getting the cash that's available to you at the beginning. So when you want to employ this strategy initially, but not later. The other thing that people ask me about is, what's important? Is it what kind of renovations should I do? And the main renovations that really improve the value of a house and are really saleable are, renovating the kitchen, upgrading the kitchen. Bathrooms and basement renovations are okay, but really kitchen and bathrooms are key. Basements don't always add as much value as the cost of the renovation. It depends. New garage could be added. Flooring, painting, furnace, roofing, electrical upgrades, all of those things will improve the value of your house and will often the appraisal will come out to cover the cost that you're looking for. So let's look at a couple of examples of what some clients have done so that you can get a sense of what they want to do. So J&R are first-time home buyers, and they negotiated a price on a house for $350,000. They decided the roof was in disrepair, so they decided to get a new roof or pay for a new roof. They got a quote, $12,000. They also wanted flooring for $5,000. A kitchen was a little improvement in the kitchen, $4,500, and then a bathroom for $2,500. So just some basic things. They didn't strip them down and completely renovate them, but they just did some improvements on the property that they were purchasing. So what happened? When they had the roofing guy out to get a quote on the roof, he said, hey, you know what, this is hail damage. And so they wouldn't have known it was hail damage, but the roofer who came out to give the quote did know. And he said, you know what, why don't you get the existing homeowner to put in a quote to their insurance company and see if the insurance company will cover this hail damage. So they did. They went back to the realtor talked to the vendor, and the vendor was willing to put in the quote, and as long as the purchaser paid the damage, the deductible. So that means that their $12,000 that they had allocated for the roof was now covered for. It only cost them $1,000. And so what they did is they ended up increasing some of the other things that they wanted to do, and added a couple of little things. And so they were able to get the house that they wanted, and because they had a professional out to look at it, they've learned something that they didn't know when they first looked through the house. So this client ended up with a mortgage of $363,000 and only had to put 5% down, and now are really happy with their house. And not only did they fix the roof, there was some damage on the siding and some soffits and some other stuff that was all fixed and all covered that they were thinking they would maybe do down the road. So these clients are really happy that they ended up thinking about doing this. So let's talk about another client. L&J, they are purchasing a house, and they just wanted to do a small renovation. They wanted to do it themselves, and so they purchased a house for $575,000, and they were going to do all the work. So they couldn't include the work being done, but they could include the cost of all the materials. And so they got quotes for all the materials, came out to about $5,000. And then they moved into their house. The $5,000 was held back, and they completed all the work, and the money was given back to them to cover the cost of the materials. So that was something that they did, and they're again really happy with their house. And the one thing this client said that astounded me was that, why doesn't everyone do this? Because it's so much better, and they get the house exactly the way they wanted it. One of the issues in their house was that the person had lots of pets, and so the walls were dented, and there was lots of scratches and dents and stuff. And so they put in some wainscoting and just made the house nice, repainted it, refinished the hardwood, and it was just it looked really nice afterwards, like a brand new house. So these other clients, G&M, they wanted to buy a second house. So they wanted to purchase a house for their kids close to university. They lived kind of out of town in Calgary, and the kids were going to U of C. So they wanted to purchase a house that was close to university for the kids to live in. And they wanted to develop the basement so that the kids could have some of their buddies stay there as well. So they got a quote for $19,400 and developed 2 bedrooms and a bathroom in the basement, and also put in 2 large windows to fire code in those basement windows. And so their total purchase price ended up being $392,000 with 10% down. And now their boys are able to be close to university. They've got roommates who are paying $500 a month towards these mortgage payments. So now the family is only having to pay $900 a month for their kids' housing costs instead of $1,500, which was what they were paying before. And if we look at appreciation, so over the next 4 years where the boys are going to university, if the property value just goes up by 2.5%, the home will be worth $40,000 more than they paid for it now. The mortgage will be paid down by $40,000. So now they're going to have $80,000 net profit on this house, or net growth on this house from what they originally put in, and they're only paying $900 a month for living there. So it's a pretty good deal. I have one other example here, and it's client J&G. They purchased a brand new house, and they wanted to. This was a brand new house, so everything was done the way they wanted it, but they also wanted a garage out the back. So the house was, I believe, a double attached front garage, but they wanted to have an extra garage in the back so that they could have some toys and some other stuff back there. And so we had that included in the purchase price as well. So we got a quote for a separate garage, and then added that onto the mortgage. Once the garage was finished, so they moved into their house, the garage was done, and then they got to the money back to pay for the garage. And so and so one of the things that these clients, it was a 9-month construction process, and so up front, the clients didn't talk about having a garage, but near the possession date, about a month, 2 months before the possession, they said, you know, we're thinking about putting a garage in, and we just saved some extra money, and we've saved about 10 grand, but the garage is 22,000. But I think we're just going to try and save it over the next year. And so I talked to them about this program, and so now they can incorporate all of this money into all of the cost of the garage into it, and they can have $10,000 to cover any miscellaneous costs like doing other landscaping, fencing, and some other things that they were going to do on their own over the next year, and so they didn't have to dip into their line of credit. So this was a great solution for them, because if they had used their line of credit for this $12,000, their payments would have been $300 versus an increase in payment of only $100 by including it in the mortgage. So they saved almost $200 a month by doing this. And not only that, the interest rate is half of what they pay on a line of credit. So they were really happy, and now she can get some of the furniture that she really wanted, and that he was reluctant to get because they didn't have any extra cash. So now she's happy, and he's happy he's got his extra garage. So it was really good for these clients, and I was really happy for them. So how is it that you can save some money by doing this? And one of the key factors is that you can negotiate a better price if the house isn't in the best condition. If the house is pristine, it's exactly what you want, and everyone else wants it, it's really tough to negotiate a better price. But if there's some things wrong with the house, and you need to go in and fix it up and clean it up and do stuff to make it just right, then this is when you can take advantage and negotiate harder, so that you can then turn it into the perfect home for you and make it the way you want by having renovators do it. And I have had so many clients who've been able to do that, and in fact, about 90% of the clients that I've worked with over the last year who are purchasing a house have taken advantage of this in one way or another, whether it's only $5,000 or, you know, one client did as much as $49,000. We actually were able to get them more than 40. We got them $49,000, and they did a huge amount of renos, and they're really happy with their house now, and it's just the way they wanted, and they didn't have to take out $50,000 worth of lines of credit or credit card debt to get it accomplished. So it was good, and it's nice to be able to be in an existing home that's in a community that's established with green trees and grass and all of that other stuff. So that's what really helps. So some of the keys to I'll talk about benefits first, I guess. Some of the benefits are you can save time, so you don't have to wait for the perfect house to come up. You can find a house and then make it perfect, and you can negotiate a better price. And you're going to build automatic equity, which always happens when you fix up your house, make it look nicer. It really does improve the value. And is it complicated? Usually, if you don't know how to do it, if you don't have contractors of your own, I have a couple of contractors that I trust, and I usually refer them, and you know, you can get a quote for them or you can get a quote from someone else, but I have some great contractors who can help you out. It's always best to have one general contractor and then have him choose other guys in the team, so you can decide who it is that he's choosing or whatever, but it's always good to have one general contractor who oversees everything, because it's much easier for the paperwork at the end. You have to make sure you keep the quotes, so you use the quotes of the contractors that you are choosing. You have to use them. So it's not a bait and switch program. So you can't go and get 3 quotes. You give me the quotes, or to give the bank the quotes for the highest guy and go out and use the cheapest guy. They don't like that very much. They want you to choose a quote and use the guy you choose the quote for. They don't want you making too many changes to what you've done. So if you make substantial changes, then we need to go back and get the bank to approve it, because they want to make sure that you're increasing the value of the house and you're not just spending on stuff that's not going to increase the value. So once you choose your quotes, you really have to kind of stick with those quotes and get that work done. Now, it's possible to make some changes, but really not a lot of wiggle room. So it's better to have it all finalized up front, and that's really the key. When you use a general contractor, normally you'd give them a deposit, and so you give them a good deposit on the work they're going to do. So you give them some money up front, so a little bit, and then you don't have to pay them until the end. And so once it's all done, then once we get an inspection completed, and then you give me the receipts of what you paid for, you give me the invoice of what's left, and then we send it off to the lawyer, and then the lawyer releases the money to you that you've paid, and then the rest to the contractor for what's owed to him. And so it's a fairly straightforward process. So that's a little bit about the home buyers plan and the Canadian customization plan. And if you have any questions about that, then please give me a call. And so we're just going to turn off screen sharing for now and cancel it. Oops. I'm not sure how to turn off screen sharing. Let's see. Go back to video. Oops. I think that's it. Maybe not. Oh well. Anyway, so let's just take a look and see if there are any other questions that that have come out of this broadcast. So let's see. Oh, that's not good. Let's take a look. See if there's any questions that have come out. No, it's a quiet bunch today. No questions. Okay. So if you have any questions about the Canadian Home Customization Plan, then give me send me a text, send me an email, just give me a call, and I will answer those questions. And if you have any questions for next week, then please give me a call next week. Next week, I'm going to talk a little bit about the advantages of being a first-time home buyer and what you can take advantage of as a first-time home buyer and how that works. And until next week, I'm really excited. I love doing these. It's kind of cool. It's outside of my comfort zone for sure, and I do enjoy it. So if you have questions, please get in touch with me or come in and watch the live app, and we'll talk to you soon. And so until next week, have a great week. We'll talk to you later.